enabled. Cyril Amarchand Mangaldas presents CNBC TV18, The Thought League, Season 2.
Hello and welcome to The Thought League, a show which presents the actionable ideas for change from the best think tank in the world. Now, today we will discuss the pitch to boost India's domestic pools of capital. We call it Financing Our Way to Amrit, Kaal, Harnessing Capital Pools. To discuss this, we have with us Sanjay Nayar, former banker and private equity investor, and Cyril Shroff of Cyril Amarchand Mangaldas. Gentlemen, so good to have you on CNBC TV18. Cyril Shroff, the government's focus is on Amrit Kaal, as has been stated by the Prime Minister first and then repeated by the Finance Minister. But Amrit Kaal requires a manthan for harnessing domestic pools of capital. What's required here?
So, the journey from 75 to 100, which has been described as Amrit Kaal, is a very exciting and forward-looking idea. And more than manthan, I think it's going to require a lot of money. So we need to think about, how this money is going to come. So what is the significance of this? It's a very deep concept that has been put on the table. So for the first time, we have moved away from a working capital economy to a project finance economy. And what that really means is that we are going to be focusing on infrastructure, innovation, knowledge, entrepreneurship. And for financing all these ideas and making them actually come alive, there is a lot of not only policy impetus required, but we have to think very smartly about the pools of capital, both domestic and foreign, both institutional and retail, and how we are going to harness this to make this new and aspirational vision of India come alive. So, and it's both a macroeconomic question, it's a policy question, and when it comes down to the nitty-gritties, it becomes a legal and tax issue as well. And I think we can spend the next 20 minutes discussing that. So with that context setting, over to Sanjay.
So Sanjay, you come with a vast experience on all kinds of financing, being a banker as well as a private equity investor. Now, in the budget, the finance minister as well as the government on various occasions has made many efforts to really unlock the kind of investments, the pools of capital we have in the insurance, pension funds, and many innovative ways also have been put on the table, like fund of funds. How do you see this really improving and also energizing our own growth capital and not be over-dependent on foreign capital only?
Yeah, look, I think that's a good way to kind of put the basic thesis behind this budget. So with Amrit Kaal and the next 25 years, if you want to have inclusive development, you want to have this level of infrastructure spending, which I think is the driving force behind the budget, and I think a very bold and a well thought out budget, frankly. You do need to crowd in the private savings and the private entrepreneurship both. So not just one without the other. And as it pertains to the ongoing improvements in productivity, governance models, I think that the government has been very actively doing, and I think there is no specific announcement in this budget towards that. So assume doing business in India has become easier. How to improve the living conditions, how to improve the job environment. I think the finance minister has taken a huge bet, and I think the right bet, which is public spending. Now, when you do this level of public spending, and with the capex having gone to whatever 7.5 lakh crores, which is quite large, one could argue you can live with a larger fiscal than this, or they've been quite conservative. My view is they've been extremely balanced on keeping the fiscal in the 6.9 going to 6.4 range. But then comes the big question, like you're saying, you have to crowd in the private savings, because beyond a point, you cannot always finance it through the fisc. So, as the glide path of the fiscal continues downwards to 4.5, you will automatically release the preemption of local savings, which goes on today from banking, insurance, and pension. So one is that. Along with that, you'll have to make changes in the pension and the insurance regulations, which this government has been doing, keeping in mind they have to finance their own fiscal. And as those savings become released, Those are household savings, by the way, and we need those to come into the real sector. Then basically you're fronted with the fact, as Cyril mentioned, what are the one or two changes you need to make, whether it's in securities laws or it's an income tax act, to welcome more of the savings into innovative stuff like InvIT and REITs, which have actually taken off, but could go much, much faster than before. So the point I'm making is that I think there is a imperative that there has to be more spending, that the government has taken that step. The government wants to crowd in private entrepreneurs and private savings. Some changes need to be made as we go along. And a great example we'll talk about later is on InvITs and REITs, what kind of changes you need to make. So my view is this is the right way to go about it. And, maybe we should discuss this further.
That's right, Sanjay and Cyril, Shroff, many efforts are being made, but execution is the key at this point. And their regulatory changes, policy decisions, and various structural impediments also need to be cleared out for this to be a reality. In your view, how are you viewing this journey?
So I think the state has done a lot over the last 2 or 3 decades as well. So it's not as if we are at ground zero, but there is more to be done. And it's a nuanced answer depending on which source of capital you're talking about. There are a set of issues for retail, retail equity, retail debt. There are a set of issues for private equity and institutional investment. There are a set of issues for how do you encourage innovation through venture debt and things like that. So let me just take a few examples. So as far as retail equity is concerned, I think, the markets may be on a high, but we always worry about, whether there will be a kind of a Cinderella moment when the magic will suddenly disappear when the clock strikes 12. So how do you make sure that, the market remains safe? So there is a lot of, continuous tinkering with the market regulations to make sure that the market is a safer place. You have to then also think about continuously about disclosure standards and enforcement so that you retain the confidence of the retail investors, because that's a big source of how you're going to harness domestic savings and convert them into investments. Moving on to the bond market, corporate bond market, I think there are very big issues in terms of how you're going to ensure that the gatekeepers are properly regulated, particularly credit rating agencies and the accounting profession. Because if you've seen from some of the crises in the last 2 or 3 years, these are the two that have failed the retail and the institutional investors who invest significant amount in the corporate bond market. So this is a kind of an institutional correction that is required. Can you believe, the balance sheets of companies or not? Can you believe companies' ratings or not? And until we get to that point, you will always have issues. Having said that, no country in the world has got it completely right. We have issues everywhere. Moving to private equity, I think there are a bunch of issues and the committee will look at it. But one that kind of stands out on top of my list is Press Note 3. And without getting into the geopolitical aspects of it, it is having a lot of unintended consequences. I mean, you might have wanted to keep out Chinese money, but why are you keeping out American money? And I think that's another big issue that requires clarification. Tax parity is an issue which I think the government is conscious of. It has addressed the surcharge issue, but there is a lot more that's to be done. So the list can go on and on. I think big things are in place. There are a lot of minor tweaks needed to release the floodgates of savings so that they can find their way through the market mechanism into investments.
Right, and lots needs to be done. But Sanjay, Nayar, government has come up with certain innovative ideas. Fund of funds, SIDBI, NIIF, all playing a very important role there. REITs and InvITs have just developed in the last few years only, you mentioned that. And also tax parity for the domestic private equity players. This is an important bit. What is in the discussion stage? What all is being worked on?
Well, I don't know what all is being worked on, but I just want to pick up on the point you just raised, Nisha, and also taking up from where Cyril left. Take another example where small tweaks need to be made to open the floodgates for local savings, okay? Now, the government has announced a very ambitious national asset monetization plan of brownfield operating assets. So this is not change of title. This is kind of a sale leaseback, and the title comes back. And this was announced, I would say, 6-7 months ago. It's very well intended, very well thought out. Where are you going to get the capital from? Now, if you look at the InvITs and REITs, and now they've been tested, there are quite a few of them, they're listed. Small tweaks, okay? Whether it is an amendment in the 54 EC of the Income Tax Act to make them eligible infra instruments, whether it is shortening the long-term capital gain period on listed InvITs and REITs from 36 to 12 months to bring them in line with equity, whether it's, including them in the indices. I mean, you can imagine the amount of local and foreign capital you can bring in. And I think that these are very small tweaks. Again, as I said, this is the kind of thing which should be on the drawing board and should probably be getting resolved with the industry inputs going in. And, you need that, Nisha and Cyril, because if you do not encourage local savings to come in, I think you're going to have overdependence on foreign investments, which is, again, great to have. And I think India is still a very, very favored destination. But if you want to be Atmanirbhar, I think this is the time to bring in the local capital to be much more self-reliant. And frankly, structurally, there is no better quality and duration of savings than local savings, and those two household savings. So just adding to the point you made, I think there are innovations in place, products in place, regulations in place, a few tweaks, and coming together of the regulators together, and I think you can have a very virtuous cycle.
That's right, that virtuous cycle is required, and as well pointed out by Sanjay Nayar, Atmanirbharta for Amrit Kaal is very, very crucial. We'll pick this point up on asset monetization by the government and many more other aspects which can be really harnessed for creating more domestic pools of capital right after this short break on the Thought League. Stay tuned.
Cyril Amarchand Mangaldas presents CNBC TV18, The Thought League, Season 2. Cyril Amarchand Mangaldas presents CNBC TV18, The Thought League, Season 2.
Welcome back. You're watching the Thought League, and we are discussing the ways and means of creating more domestic pools of capital to really energize our own growth in the country. Cyril, Shroff, earlier Sanjay Nayar had mentioned about the asset monetization plan by the government. That will not only give more money in the coffers of the government for the kind of infra spend that they have really articulated through Gati Shakti in the budget, but also free up some of those PSU assets which are lying on the books of the government and which are capital intensive in nature. How do you see this particular move in enhancing domestic pools of capital?
So privatization and asset monetization are both brilliant concepts. I think the foundation was laid in the 2021 budget. And we have to see now how it unfolds in the next financial year. And both are very different because in privatization, there is a transfer of title, and asset monetization, it is more a structured instrument where the user of the asset is given for long periods of time on a set of criteria that will be laid out. So I think there are a lot of detailed skills that are required in terms of making this possible. For example, you're going to require a kind of a model asset monetization framework of what are the risks that would be retained and what are the risks that will be transferred. And they should be bankable because any bidder or acquirer who's stepping in to take control of an asset will have both debt and equity financiers standing behind them, and the risk should be acceptable. So the risk matrix for asset monetization needs to be articulated very clearly. Otherwise, you're going to have a Swayamvar without any bridegrooms showing up. But the opportunity is enormous. So there is data to show that almost 80 to 90% of the benefit of the unicorn boom that we have seen in the recent years through the venture capitals are actually all foreign money. And it could have well been Indian money. And the reason for that is that our pension funds have not been allowed to invest, for example, in the VC funds and others. So there could be policy changes that are required for enabling domestic pools of long-term savings to invest at least a part of their funds into this kind of new segment of investing, namely innovation investing. Otherwise, all of this is essentially going out. And I think this is one of the most important parts of Atmanirbharta in financing Amrit Kaal.
That's right, and well pointed out, Cyril Shroff, because, yes, Sanjay, basically the government has been quite cognizant of the fact that the entire ecosystem has been funded, and therefore the foreign capital and the foreign investors have benefited most from this first wave of the startups making it to the IPO market and value unlocking. But Sanjay, you have more to add on this.
Yeah, I was just going to add, because we missed the thematic fund issue. That is another great initiative in this budget. Seeing the kind of success and the multiplier effect of NIF and the SIDBI funds, you cannot ignore the announcement that has been made on 20% participation by the state to encourage more of these thematic funds that you said. I think it's another great way of crowding in private savings. And they have obviously, to the point of innovation, identify deep tech, agricultural tech, ed tech. These are all great areas to look at. That's, again, a unique way of doing it. I think they need to be operationalized and executed quickly.
Yes.
And I think I just want to mention that this is another great idea of crowding in private savings. And with the public 20% being there, gives them a lot more confidence. And frankly, even in the National Asset Monetization Plan, all the money being raised is going to get recycled into infrastructure again. So just to be clear,
yes,
it's not about necessarily bridging the fisc, but it's giving enough space to the fisc.
Yes, it lowers the borrowing because you have more avenues of cash generation for the government coffers. But Sanjay, equity is not the only, mode of funding growth. Till debt became a bad word in the overall, asset assessment period. Before that, the banks used to really fuel the capex requirements of very large companies, and that needs to pick up. First, from the animal spirits of the big companies announcing, and second, banks having that confidence of giving that debt as well. What do you have to say about the debt market and enhancement and giving more depth to that? Because infrastructure projects need a long haul arrangement of that capital.
Well, unfortunately, that is one area where we have lagged behind. And there are many reasons for it. And I don't think banks, frankly, are the ones who can do project finance beyond a point. Ultimately, these things in other markets, both developed and some developing markets, goes back into long-term bond markets.
Yes.
And we've had many bond market committees. I think, again, if any government can implement some of the changes, it's this one, which is, again, well-meaning and well-intended. A long-term bond market, again, will be supported only if you have long-duration capital behind it. And again, comes back to insurance, pension, and long-term household savings, not just FPI. But FPI, of course, will also come in. So you need long-duration liabilities to come in. On supply side of having infrastructure projects, I think those can be structured. SEBI can look at them, you can have prospectuses, all of that can be done. And frankly, even in that, if there was an element of public capital, say if LIC put in the first billion, I think the next 10 billion can come from private savings. So there's a multiplier effect again. If you initiate a project finance bond market or a municipal bond market, but banks are not the answer. And it's never expected that banks carry such long-term debt on their books.
That's good. So, glad you mentioned about the bonds, because very recently we have seen a big business house raise a huge amount of green bonds, Cyril Shroff, and I would like to attract your attention there. And that gave us a lot of confidence that at a low rate, if green bonds can be raised by Indian, companies, and at a time when liquidity crunch could really come in with Fed, taking action, this could be a space that can really develop.
You're absolutely right, Nisha. I think green finance is a separate and distinct theme by itself, both from a debt and equity perspective. And it is going to be a major part of how the energy transition in India is going to be handled as we move away from fossil fuels into renewables
Yes.
in the next 2 decades.
And one more thing, Cyril Shroff, very quickly, distressed assets will also come up, and continuously there'll be a supply of that, given that we are just about recovering from COVID situations. How do you see this particular piece developing, and what needs to be done here?
So reform of IBC and having an efficient distressed asset market, I think, is a critical condition not only for resolving distressed assets per se, but for a broader efficiency of the financial markets, including the corporate bond market. So if you remember, even in 2016, when the IBC came and when it kind of in the first few years, it was producing a lot of outcomes, the bond markets were doing very well. But since IBC has now kind of lost steam a bit, it is having a knock-on effect on debt markets in general, including the corporate bond market. So fixing IBC has to be a national priority. Within that, I think fixing the NCLT system is probably the biggest point that needs to be done. It's completely broken.
All right, and Sanjay, Nayar, last word to you. Looking at the overall landscape from the corporate advantage that you have, as well as banker and investor view, and also listening with the government on various macroeconomic aspects, how do you see our Atmanirbharta towards the investment climate really taking shape right now?
I think as far as the climate goes, it's driven by 2 or 3 things. I think the governance model in the government, the degree of transparency, the tax administration and efficiency, I would say in a way, probably disappearing of kind of crony capitalism and being absolutely merit-driven are massive positives for attracting any kind of savings, foreign or Indian, okay? What we need finally is growth and sustainable growth. And I think this budget takes a very serious crack at achieving the 9% to 10% target by going through the public expenditure route. Very positively positioned. It's, I would say a few quarters of great execution and hopefully the private sector jumping in as well.
All right. So on that positive note, great thoughts there, Cyril Shroff, as well as Sanjay Nayar, as we try to harness our own domestic pools of capital. But investors have always liked tax certainty in one and no flip-flop in regulations, as well as ease of deal making. And these are the 3 aspects for which ecosystem needs to be a lot more strengthened. With that, it's a wrap on the Thought League. Thanks so much for tuning in.
Cyril Amarchand Mangaldas presents CNBC TV18, The Thought League, Season 2.
Focus. Ideate. Innovate. Enable.